There are four types of initial management. The first one is separate acquisition. The cost incurred in separate acquisition is the purchase price less trade discount and rebates plus any direct cost that incurred in preparing the asset such as import duties and legal fees. The cost excluded is the cost of introducing the new product such as advertising and promotion. The second one is the cost of conducting a business in a new location or with a new customer. And the last one is administration and general overhead. This is the example how we want to calculate the separate acquisition. The example of initial measurement: on 1st January 2018, Ingrid Berhad acquired publishing rights at cost of 10 million thousand and a legal life of 10 years. Discuss the accounting treatment for the above transaction. The accounting treatment is on 1st January 2018, the publishing right shall be recognized as an intangible asset because it meets the definition of intangible asset and the recognition criteria of the intangible asset, which are identifiable, control, and future economic benefits. It is measured at cost of 10 million thousand and to be amortized over legal life of 10 years. The second one is the initial measurement on business combination. Its cost is the fair value at the date of acquisition. Fair value is the market price in an active market. If there is no active market exists, fair value is the amount that the company willing to pay on the acquisition date.
So next is initial measurement under government grant. So when the government grant an intangible asset to an entity, which is government agreed to give intangible asset to a company, such as airport landing rights, import license, a quota or rights to access other restricted resources. The intangible asset is acquired free of charge or for a nominal consideration. Nominal consideration is a condition which has no relation to actual value of the contract. Grant is recorded at fair value or nominal amount plus any direct expenses incurred in preparing the asset for intended use. Example question for government grant. On 1 July 2013, the Sabah government grant Tunas Mekah the license to operate Sun Quarry for 10-year period. The fair value of license was 4 million. So we need to explain the possible accounting treatment for the license above. So the accounting treatment, the license shall be recognized as intangible asset because it meets the definition of intangible asset and the recognition criteria, which is identifiable, control, and future economic benefits. It is measured at fair value of 4 million and to be amortized useful life of 10 years. So next is initial measurement under exchange of asset. Its cost is at fair value unless the fair value cannot be measured reliably. The exchange transaction lacks of commercial substance. Therefore, it is measured at carrying amount of intangible asset. And if there is any gain or loss, it will be recognized in the income statement, profit or loss. So the example question for exchange of asset is Cahaya Berhad owns a patent for garment, which has carrying amount of 200,000 and a fair value of 300,000. Mekah Berhad owns an export textile quota and diamond which has fair value of 400,000 and On 1 January 2014, Cahaya Berhad wants to exchange its patent with the textile quota entitlement of Mekah Berhad. So, Cahaya Berhad will pay additional cash 100,000 and Mekah Berhad agrees to the arrangement. So we need to explain about the accounting treatment of the exchange of the intangible asset and prepare journal entry to give effect to the exchange. So the accounting treatment is the value of textile quota is recorded in Cahaya Berhad's book which is amount 400,000, which is the fair value of the asset received. Therefore, we will debit to textile quota entitlement amounting 400,000 and a profit of 100,000 on the patent, which is 300,000 minus 200,000. The difference between amount of the patent and its fair value. 300,000 minus 200,000 get 100,000. So it will recognize in statement of comprehensive income as revenue. So we will credit the patent because we already exchanged the textile quota from patent to textile quota, and we will credit cash 100,000 because we will Cahaya Berhad pay 100,000 cash additional, and we will credit gain in statement of comprehensive income because it's the difference between carrying amount of patent and its fair value. Thank you.